Hi guys, I just wanted to do a quick tutorial on how to use the Bollinger Band as a signal. The first thing, obviously you only want to be using a buy signal in an upward trend and a sell signal in a downward trend, or when you're expecting the market to go down. So I've got a quick example here really, which I'll get into. If you see here, basically we've got a low, a high, higher low, followed by a higher high. So we've got an upward trend happening, and we've drawn our Fibonacci from A to B. And the first thing that we need to wait for, obviously, is for our price to come down and hit our zone. So now we've got a candlestick which has entered the zone. But if you look at the but if you look at where the Bollinger Bands are, you see you've got a candlestick that's come right down through the outer perimeter and closed outside. But we can't, whilst it has touched the inner perimeter, it's closed right outside. So we can't use that. So we have to wait. Next candlestick, again, the same thing is there. It's nicely in our zone. Okay, so almost bouncing on that 61.8, but we have to wait. We can't use that as a Bollinger signal yet. Okay, so we wait. And also this candlestick here, it's got a body which is outside of this outer perimeter of the Bollinger Band. So again, we have to wait. And now we have got a candlestick, and the wick is just entering the inner Bollinger Band. That's fine. That you can count as a Bollinger Band signal. Obviously, you don't just use one thing on its own. We need to have a good couple of nice signals, either candlestick or stochastic or MACD as well. But that you can count. So if you counted that and you had something else, you could place a trade based off of your Bollinger signal there. Sometimes this is what you will find happening, that you get a Bollinger Band signal, and there's another good one there. And then all of a sudden, you get another candlestick which comes and closes outside of this outer perimeter again. Okay, so this candlestick has just nullified these signals. So we have to wait. So we wait again, and we just see what happens to the next few candlesticks. Okay, again, I think this one is just slightly out of, leave that. Now, okay, so here we've got a candlestick which is closed outside of the outer perimeter, this bearish candle, followed by one where you've got a body that hasn't closed or opened outside of this outer perimeter. So at this candlestick here, you've got another Bollinger signal. And you can use that as your signal. And then, yeah, based on the Bollinger, then that would have given you a signal. You obviously would need to wait for another signal before placing the buy trades. But the rules are, again, you need to wait, make sure that it's in the zone. You know, don't just take these signals wherever. Make sure you're doing it in the direction or the momentum of the trends. And the rules are that you must have a candle which has touched the inner perimeter at least, but not closed outside the outer perimeter. So this is not a signal. This is not a signal. It's just the movement is too hard. You know, we want just something to have ticked within these two perimeters here. If it's a wick, fantastic, no problem. Even if it's a body like this, but you can see here, none of this body was outside of this outer perimeter. So this is also a good Bollinger Band signal. Guys, I hope that clears up. I know one or two of you had questions on this. I hope that kind of clears it up. You know, obviously, if you're looking to buy, you need to be looking at the bottom of the Bollinger Bands rather than the top ones. And if you're looking to sell, then you'll be looking at the top inner and outer bands there. Okay. Any questions? Pop onto the chat room, come in and see us. And then, yeah, look, we're here to help.